Hey everybody, Rob Maurer here. Happy Friday. Today we are going to talk a little bit more about the Tesla price cuts in China. We've got a comment from one of Tesla's VPs in China. Also talk a little bit about an update on Giga Texas. We are seeing some parts roll in from IDRA, hopefully that for that 9,000 ton Gigapress. Also got an update on Tesla insurance and a couple other items as well. All right, looking at the stock today, pretty eventful day. Tesla finishing up 2.5%, but a 10% swing intraday today, as we started off really underperforming pretty significantly, catching up with the markets a little bit throughout the day. The NASDAQ was up 2.6% on the day, so unfortunately didn't quite make it back to outperforming, but given the start of the day, I think we'll all take that. So obviously some negative reactions early in the morning as people digesting the price cuts and maybe some trading around those things, but recovering throughout the day, which is really nice to see, and hopefully a signal that the market is digesting it, understanding it well enough as we head into 2023 and what this might mean for Tesla's earnings and demand and pricing and margin, all the mix, all the equation of the business tied together for this year. So we'll see on that, but also interesting today, the other Chinese automakers, at least listed on the US exchanges, NIO, XPeng, Li Auto, all down 5 to 15%. So showing signs of what we had talked about yesterday about how this really puts a lot of these other automakers in a tight spot. These are just EV makers, of course, but if we think about ICE vehicles as well, it's going to put pressure on them. Certainly any other companies that are trying to enter the EV market makes things a lot more difficult there as well. We also have a report from CNBC that Tesla's suppliers' stock shares also jumped today, as there's signs there that Tesla's price cuts hopefully boost demand, and obviously that would add more business for suppliers as well. So getting into the comments from Tesla on this matter, Tesla Chan on Twitter sharing this, and these comments were from Tesla's VP Tao Lin, and she said that basically on the pricing, that the published price adjustment in Beijing covers numerous engineering innovations, essentially unique laws of cost control, not limited to integrated vehicle design, product line design, supply chain management, even millisecond optimization. We will respond to the call of the state with practical action, promote economic development, and unleash consumption potential. 2023, let's meet a better life together. So with this, obviously, when Tesla's cutting prices, they're going to talk about how the price cuts are driven or enabled by cost reductions. So that's what, Grace here is talking about, basically just saying that the price changes that we're seeing here are commensurate with price reductions on cost of goods sold through all of the things that Tesla has done, all the progress that Tesla has made. And like we had talked about yesterday, to some extent, there is probably some truth in that, but I think this is more a reaction of just pricing to match supply and demand, essentially, right? I think these things are accurate, and certainly Tesla has made progress on bringing costs down over time. I think we'll see that continue as, like we had talked about yesterday, we've really only seen 2 full months of full production out of Giga Shanghai since the production upgrades, which increased production 20 to 30% or so. So with that, that's obviously going to drive costs down, maybe not to the level that we have seen prices come down, where we've had 2 cuts here in October and now in January that add up to be maybe 15% or so. That 30%-ish increase in production probably not going to bring cost of goods sold down that much, but hopefully we're seeing costs in terms of materials and things like that come down as well, which will limit, along with increased volume, the impact of this on Tesla's net margins, gross margins, and everything like that. So it's going to be fascinating to see how this all shakes out as we get the Q1 earnings report and later reports this year. Now, a good reminder here from Roland Percher on Twitter. He has tracked the price changes. So I've done a good job of this with the US, not as good a job of this internationally, but some really nice visuals here of how pricing has changed in China for various different vehicles over time. And you can see back in 2020, prices started out pretty high, consistently dropped down as Tesla continued to grow volume. Then, of course, we had everything that's happened with supply chain constraints over the last 12 to 18 months or so. And that has obviously led to some price increases both in China and elsewhere. But now, with production increasing, the market's stabilizing a little bit more, and maybe some recessionary type of impacts happening, we're seeing these price cuts happen again. And, we're sort of back on that curve that Tesla was starting to establish at that point in time. So I think when you give a longer term perspective to this, although these are sudden and that can be a valid cause for concern, it's really good to remember where things started out at. And, when Tesla was back around these prices, a little bit higher, a couple percent higher, at least on the opening price for the Model 3. The Model Y obviously fallen a little bit more, but relative to where it started, but a couple percent higher. Tesla was still producing really strong automotive gross margins at that point in time. Internationally, obviously we don't know the exact mix with China and elsewhere, but and China volume has probably grown since then in terms of the mix, but it's very helpful to see that. It means that with prices at this level, Tesla can still have a very healthy, very strong gross margin business at these prices. So a good reminder there, and great work there from Roland Percher. All right, moving on from China, we've got an update here from Joe Tegmeyer, one that we've all been waiting for quite some time. We've started to see some things seemingly trickle into Giga Texas for the 9,000-ton Giga Press. Looks like we've got a lot more of that happening today. Joe capturing a lot of different photos here of IDRA containers being brought into Giga Texas. So huge containers here. This looks like probably the big delivery for the 9,000-ton Giga Press. Maybe more of these to come, but significant crates being shipped in here, which is really exciting to add to some of those pieces that we have seen so far. So as we have talked about previously, the time to reassemble a Giga Press on site, according to IDRA's own communication on this, they talked about this in a YouTube video like a year ago, something like that. That's supposed to take about a month. Now, with this being the 9,000-ton press, that could mean it's a little bit longer. Obviously, this is a new version, and it's a bigger press than what we have seen before, so that could add some time to that reassembly process. So we'll see on that, but I would expect that this would be pretty much up and ready to go this quarter, and then Tesla can work through the remainder of proving out the production process, hopefully with the Cybertruck, and get that started in true production later this year. So really great to see signs of that. And then another update here on Texas. This relates to Tesla insurance. Tesla has filed to begin underwriting their Tesla insurance program in Texas. They are going to begin that March 1st this year. Previously, Red Point County Mutual Insurance was the underwriter, so Tesla would be taking that over, which would be exciting to see. Tesla has been offering Tesla insurance in Texas for quite some time. Just as a reminder, we've previously talked about how that vehicle registrations in Texas are about 9% of the overall market. Tesla is in about 35-ish% to 45-ish% if we exclude California in terms of the total vehicle registration share that they play in terms of what's being offered in Tesla insurance. Sorry, there's like an automated feeder going off behind me and it's really distracting me right now, but I don't know if you guys can hear that. It just keeps going. Anyway, in Texas, that's about 9.6% of vehicle registrations, Tesla playing in about 35%. So Texas would make up about 25% of the market that Tesla has entered into in terms of total vehicle share. Now, Tesla's shares might be a little bit different, but where I'm going with this is that in September, based on reporting, this policy had 11,000 policyholders in Texas. So if we assume that Texas is about 25% or so, which those numbers would yield, of Tesla's insurance addressable market at this point, then maybe we in September had about 40,000 or so Tesla insurance customers. So that's really interesting data for me. I modeled this out in my model, so I'm going to go back and see how that relates to where I'm at for Tesla insurance, but a really nice data point that gives us there. So exciting to see Tesla taking over more of that. Should allow for, hopefully better margins for that business there in Texas. And then lastly, as we head into next week, a couple of macro things to keep an eye on. We didn't talk as much about that this week because we've had so much other stuff going on with Tesla, but should be a busy week for the macro next week. Fed Chairman Jerome Powell speaking on Tuesday. That is before market open. And then on Thursday, we'll have a huge CPI report, consumer price index report in the morning as well. The producer price index PPI, that won't happen until January 18th. Not sure why that's the following week, but CPI, that'll be a big one to watch for next week. All right, that'll wrap it up for today. So as always, thank you for listening. Make sure you are subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you on Monday for the January 9th episode of Tesla Daily. Thank you.